Hi everyone and welcome to today's morning report on Wednesday the 20th of January with me, Rich Pro Market Analyst at Hadtech Markets. Wow, big sell-off in Europe, just continues to fall away. The big driver behind this move has been oil overnight. There was a report from the IEA, the International Energy Agency, over yesterday that suggested that there was a massive supply glut and the market was awash with oversupply. So prices have fallen sharply. The oil price on WTI is down almost 4% now. Show you that big fall away. 27.40. 27 is a figure. It's a technical downside target, but it just looks as though it's just not stopping at the moment. It's really negative. And that whole negativity surrounding the oil price is just flooding through the market. Risk appetite is just on its knees at the moment. Look at the Treasury yields. 10-year Treasury. Wow. It's well below 2% now. Back at levels not seen since October, and it really is falling away sharply. And look at that 2-year as well. 2-year back at levels not seen since early November. So these markets are all suggesting that certainly that the Fed could well struggle now going forward, but also global growth is a real issue as per the US 10-year yield as well. So it's a real strain, and we're seeing safe haven trading. We're seeing the euro strengthening. We're seeing yen, massive strengthening in the yen. The classic safe haven trade there. Big breakdown on the dollar yen today, and I'll talk about that in my chart appraisal in a bit. But certainly, these markets are really being impacted by this. Stock markets. Big breakdowns, 3.5% on European trading, 5,700 on the FTSE. That's the lowest since 2012, and the DAX is also 3.5% off. So I mean, just really massive negativity in the markets today. And will the data be able to help us? Well, I'm not entirely sure. We've got a load of the European data is basically around the UK unemployment numbers. You've got unemployment that's out at 9.30. The headline unemployment is expected to stay at 5.2, but the concern could be that average weekly earnings in the UK have been falling in the last few months, and they're expected to fall again on an ex-bonus basis down to 1.8%. So declining average weekly earnings is not positive for sterling. You're seeing sterling under big pressure as well. Then into the afternoon, we've got the US inflation data, which is interesting because the headline number is expected to improve to 0.8% from 0.5%, and also not only that, the core data up to 2.1% core CPI. That would be the highest since July 2012. So that would suggest that would be again supportive for the dollar, which would be interesting. And not only that, we've got a rates decision from the Bank of Canada, and what are they going to do? The expectation is for a rate cut of 25 basis points to 0.25%. So that's certainly not helping the loonie today, which is again strongly incredibly weak, as are all the commodity currencies. So my chart of the day is the Kiwi dollar, and the Kiwi dollar. It's a really disappointing chart actually, because I thought I was going to be able to come in today and start to talk about this little recovery, because we had the Kiwi dollar trading nicely higher yesterday afternoon, looking like it was going to break this downtrend, looking also like we're going to get some momentum buy signals as well, but a massive turnaround and continued downsides today just have blown that whole support of around 64.25 out of the water. That is negative. Certainly now looks like we're going to get a full retracement back towards the 62.33 mark, which was the September low, but also early September low and the August spike low as well. So that's a big support, 62.35 area, and it looks like we're going to be getting a move back towards there. Momentum indicators are very weak, and certainly showing further downside momentum. So you'd be looking to use rallies as a chance to sell, as you have done throughout these forex majors really. Support becomes new resistance. Old support becomes new resistance. Again, that's a feature of this chart here. initially in at 65.88, then around that 65 figure mark, 65.15, which is actually a medium term pivot. Actually, 66.15. 65 figure is a big pivot as well near term, and now we've had a break below 63.80, and is 63.80 now becoming a basis of resistance as well. So some key overhead supply issues there for the Kiwi. So rallies are a chance to sell certainly in this, and there's a resistance band from 63.80 to 64.15. So I wish you good luck in your trading on the Kiwi dollar today, and it doesn't look great for risk. So I will speak to you later. Thank you.